Good day, everyone, and thank you for joining me. My name is Russell Gard, Director of Forward Prosperity, and today we're diving into the latest data from the Reserve Bank of Australia for April 2026. In this update, we will look at three critical financial data points, namely Australian government bond yields, the Australian dollar exchange rate, and the Reserve Bank of Australia's balance sheet reserves. The goal of this update is to help inform you of important financial system developments that you may not necessarily get from the traditional news media. To begin this update, let's look at the Australian government bond yield curve as of the 31st of March. What we see here is a healthy upward sloping yield curve with short-term rates, or specifically the one-year yield, sitting at 4.62%. As we move further out, the 5-year yield rests at 4.7% and jumps up further to 4.99% for the 10-year yield. Finally, the yield curve reaches a peak of 5.36% for a 30-year term maturity. Moreover, the spread between the 10-year and the 2-year bond yields was 0.34%. This positive spread suggests that the market is not currently pricing in a recession, but rather anticipating steady economic growth and perhaps a higher for longer inflation environment. Moving on to currency markets, the Australian dollar has had a slightly volatile start to the year. In January, the AUD-USD exchange rate held steady at 0.7 US dollars. After this, we saw a brief moment of strength in February, where the Aussie dollar climbed to 71 US cents, likely driven by commodity demand or interest rate differentials. However, by the end of March, we saw a complete retracement of the AUD back down to 0.68 US dollars. Keeping this in mind, it's also worth highlighting our standing against other major currencies, as the Australian dollar was trading at 0.6 against the euro and at 0.52 against the British pound sterling. This recent softening of the AUD could provide a tailwind for Australian exporters, even if it adds slight pressure to general importing costs. Finally, let's look at the official Reserve Bank of Australia's foreign exchange and gold reserves. This chart shows the total value of foreign exchange and gold reserves held by the Reserve Bank of Australia, denoted in billions of Australian dollars, as of the 25th of March 2026. Looking at this chart, we can see that the RBA started the year with reserves of over $115 billion, but experienced a steady decline through February, hitting a local minimum of approximately $107 billion. The most interesting movement occurred in mid-March, where we saw a massive spike back up to $114 billion on March the 18th, followed by a sharp drop back downwards toward $111 billion in just 1 week. This volatility suggests that the RBA may have been quite active in financial markets, or that the valuation of their gold and foreign exchange holdings has shifted dramatically over the past few weeks. In summary, while the yield curve suggests structural optimism, the exchange rate and asset reserve data remind us that the global environment always remains fast-moving and volatile. At Forward Prosperity, we're here to help you navigate any financial or economic changes to help you reach your finance goals. If you would like a free, no obligation assessment of your finances and financial position, head to forwardprosperity.com and book in a complimentary finance conversation. Thank you for watching this finance update, and if this has helped you, please drop a like, comment your biggest question below, and subscribe to the Forward Prosperity YouTube channel for more economics and financial updates.